Hello everybody, welcome to my video series where I'm attempting to turn a $1,000 balance into $400,000 in a matter of 6 or 7 years, trading conservatively. So this is all done publicly using my professionally built algorithm that does everything on autopilot. So hopefully you can follow along with me in this journey. Hello and welcome to episode 4 in this video series where I'm attempting to turn a $1,000 balance into over $400,000 in a matter of 6 to 8 years. So since my last update 2 weeks ago, I've been able to profit 1.31% on this account in a very conservative and low drawdown way. And so what that looks like is a 30.4% gain on the account right here. And the account's been going since July 2nd of this year. So we have a 0.87% gain for the week, which is $20 profit, 138 pips overall, and 12 trades taken. For the month, so 1.31%, $30 profit, 265 pips locked in, and 22 trades. So we still have 2 weeks left in the month. So I'm hoping that that we'll have a good rest of the month. I'm shooting for anywhere from 3 to upwards of 5% for the rest of the month. So we'll see what happens with that. We've taken 22 trades, which is on average 1 to 2 trades every single day. So that's a pretty active algorithm, the Ranger EA. And I've actually added another $200 deposit to this account since we're in the month of December. So you can see right now that we have $2,000 deposited into this account. And that is $400 gain on the account since it started back in June 2nd. So it's $2,421 that we've gained since June 2nd. So this video series is about combining trading to profits and investing. So we're basically growing wealth in a combo style like this because we're dealing with small balances. Most people that trade the Forex market that have $1,000 take extreme risk with these balances, causing them to blow accounts and lose all that money. So what we're doing here is attempting to grow a small account balance through trading profits and also investing with the hopes that we can gain a large sum at some point by being conservative in the approach. So before I get into the trades setups that took place over the last 2 weeks, I wanted to show you guys a real quick update of the Trader's Way account that's been running for almost a year now. So we're just about to hit the 12-month mark of smooth sailing profit on this account with 71% gain and just 10% drawdown. So really quite awesome to see this take place, and I'm really excited to hit that year mark in just about 2 or so weeks. All right, so the strategy on the low risk 50 to 1 leverage account, you can see that it still makes gains, but they are lower because of the lower leverage, and this is being done at Oanda. All right, so let's get into the actual trades themselves. So this is the pound Canadian dollar that I'm going to be talking to you quite a bit about, because that has been the most active pair of the two since our last update 2 weeks ago. So we have trades on the buy trades that took place right here. This was on December 1st. So these were 2 setups that happened. So this was 2 trades that closed out for a profit right there. And these 4 trades closed out for a profit right here on the 2nd as well. So we had a 2 trade basket followed by a 4 trade basket. And then that was against the trend. So the trend was going down on the 4-hour mark. And we were able to catch that move, that bounce back up, and a lot of times I like to call it a pocket of movement that takes place, and that's what the Ranger is so good at finding, is those places where the market or price starts to slow down and looks for a pullback to happen. And so you can see that with the trend on this one, we were able to take 3 positions on the sell side. So zooming in on this a bit more, I'm going to show you what happened. So we have the inside candle set up with the trend. So the market, we're thinking the algorithm's looking at the market to go down at this point. And you know, the hardest thing to do is to get the best entries on the first trade. And that's why grid trading is a powerful tool, is because it allows us to not always be correct or accurate on that first trade. And we give ourselves more chances, more room for the market to go in our favor. And that's what took place right here, is we had the trade 1, trade 2, and trade 3. And trade 3, that's when we finally got that movement back down, and the trend continued in the downward direction at that point. And that took place on the 3rd of December. Okay, so now we're in the downtrend on the 4-hour chart. Okay. And the ranger starts to look for potential pullbacks on the upside. So once we have a lot of movement on the down, we're looking for a pullback to happen and then maybe even a continuation back down. In this case, it moved down and we took an entry thinking that there was going to be a pullback up. And you can see right here that that pull back on the upside just wasn't enough. It was close. We got some movement and then it extended further down after that. And that's when we entered more positions. And I'm going to zoom in on this one so you can see a little bit better of what took place, because this is showing the flex grid in activity here. So we have trade 1, trade 2, 3, and then 4. Okay, and then that's when the market started pushing down at a faster pace. The volatility started picking up, and so the ranger realizes that, and that's when it stops its 20 pip grid. You can see that we're on a 20 pip grid from one order to the next. And this one was actually 85 pip gap from the fourth order to the fifth order. And what this causes us to, or allows the strategy to do, is we have four grouped trades together, and then a gap that happens, and then two trades at the bottom. What this allows us to do is to get in at better prices when the market starts to actually slow down and does its recovery, giving us a better, cleaner recovery on the actual trade basket itself. So really cool setup there, and it shows you the shows how or just what takes place when the flex grid is active. Okay, now after the push back up, we're still in that downtrend on the 4-hour mark, the 4-hour time frame. We had the pull back up, and then we had another entry on the downside. So this was a single, really accurate trade that took place, and there was basically no drawdown on that. It just went straight down, and that was it. Took profit. So awesome there. All right, so that was on the 7th of December. So no trades after that for a while on the pound Canadian dollar. We haven't had any trades for the last, I think, we actually did have, yeah, it was the last one was on the 9th of this month. So we had one more trade that was taken, and I didn't see it because it was so small, and it was a single trade that took place right here. So this one was also with the trend on the downside, and you can see that yes, it did take only a small piece of that pie right there, because that was really the peak of that move right here, and it fell like 300 pips after that. So you might be thinking, oh, why not just put a trailing stop or try to hold that longer? I had no idea that the pound was going to move that 400 pips down or 500 pips down after taking that position. The algorithm doesn't know that. Nobody really knows that until after the fact. So don't go telling me that you should hold on to your trades when in most cases we don't really know what the market's going to do, and holding on to trades is a very difficult thing to do because we just never know when price is going to reverse, if it's going to go in our favor, how to hold on to those trades. And so most of the time with my strategies, I don't use trailing stops or I don't try to hold on to trades because I find it to be too risky when typically more profit is made by locking in with your strategy instead of trying to push the profits as long as you can. A lot of you are going to disagree with me on that, but I do agree with one method of holding, and that is taking two positions, locking profits in on one, whether it's 30, 50 pips on one trade, and letting the second trade ride out the potential profits and using that to changing that second trade to break even. So this is a really good method that I think is used by some people. And when riding profits or letting those profits ride, I think it's important to make sure that you have two trades, one that closes out some profit so you can lock the profit in, and the other one changing it to break even and seeing how much profit you can squeeze out of the rest of the trend. This video today is sponsored by MetaBeep.com, and this is a really cool piece of software that allows you to basically put all of your VPSs, so these are all your virtual servers that are running algorithms, whether this is in the Forex market or crypto, and putting them all into one visual place. So MetaBeep allows you to see all of your VPS servers, whether that's 1, 2, 3, and all of the algorithms that are running on these servers to be put into one spot in one visually very simple to read place. So the last thing I wanted to talk to you about today is what kind of gains are respectable and achievable and consistent and when trading in any market, not just the Forex market, but this also includes crypto and futures and precious metals and whatever it is. So many people keep telling me on almost on a daily basis that it's ridiculous how I can't get consistent gains over 10% a month. And if you've done any kind of research, and I have done so much research over the last 15 years in the Forex market, seeing what kind of things are possible, what kind of profit, what kind of loss is possible over the long term. Because every strategy does something really well. It's pretty rare for a strategy to be able to range trade well and a strategy to trend trade and to scalp really well. Most strategies only do one thing really well. And that means that when the market's not, trending for a trend trading strategy, then it's possible that that trend trading strategy is going to start having losses. And so you need to find out ways of building your strategies so it can withstand those market phases that try to break down the methodology behind it. A lot of traders don't understand this concept and they don't do enough back testing with their strategy to find out how to make it through those market phases to keep the strategy alive and constantly churning out profit. And so that's why I find so many people emailing me and trying to tell me, this is how you trade. I've done it. But the problem is that they don't give me any results longer than a couple weeks or even a month. And they eventually realize and that their strategy breaks down because they're constantly trying for too much profit and don't prepare for the long-term game, which very few traders actually do. So I'm going to be showing you right now Signal Start. So this is a website, signalstart.com, and it's connected through my FX book, and it shows you, it allows you to copy traders, some pretty good traders around the world through a very simple copy mechanism. This isn't a plug for Signal Start, by the way. I'm not affiliated with them, but you can find it's a good place to gauge what kind of things are possible in the Forex market when it comes to traders and longevity and systems being used and algorithms, all that kind of stuff. So if you go to signals, you'll see the top signal, for example, is Profit 24. And I think you can see that, yeah. So if you click on Profit 24, you're going to see that, okay, so he has a 585% gain with 3.63% drawdown. You're thinking, whoa, this guy must be amazing. His signal is $95 a month. All right, well, that's pretty expensive, but if he's making 585% profit, dang, I gotta copy this guy. I'm gonna spend the $100 a month and make 585%. Don't be dumb. That's not what you're supposed to do because that is jumping the gun on something that you know not a whole lot about. This person only has 2 months of results. And you might be thinking, well, 2 months is kind of a long time. That's pretty consistent. But you'll realize that when somebody's making this kind of profit of 244%, that means that they also have to basically put their entire account at risk. And they're likely going to blow their account, whether it's next week, tomorrow, or maybe they'll last another 2 months. I don't know. But that's a risk that a lot of traders are willing to take with smaller balances. But if you realize that just saving your small balance of $1,000 and growing it in a small way, you're going to end up having more money in the end than taking high risk gambles like this person, Profit 24. Okay, so what about this character right here? This person, lucrative FX. Now they're using 401 leverage, and their drawdown is sitting at 15% with a pretty good gain of 1,621%. And their results look pretty conservative and on point, right? And you can see that this results have been going since February 2020. So this person is pretty consistent and their gains are pretty high. Some months are sitting at 50%, and their current gain for December is sitting at 4.64. Even these results of 20%, 30%, 50%, this kind of system will break down. It will break down. I know that some of you will think that this is possible over years and years of time, But the most I've ever seen a strategy live with these kind of results is usually about the year or year and a half mark. And and I guarantee they always break down. And I'm trying to get this point across to everybody so you stop taking huge risks like this when it comes to copying traders or taking risks in your own trading. Start shooting for lower profit amounts in the 5 to 10% range, even less than that, maybe 3 to 5%. And you'll start to grow an account at a much faster pace, being conservative and not just trying to throw away your money. So if you start looking at traders that have been doing this for a lot longer, so accounts that have been going since 2017, for example, this has been going for 3 years, you'll see that this trader is pretty damn impressive. And they were averaging gains of 5 to upwards of 10% in 2017 into January 2019. And then they really started pushing their gains up into the 20% mark after that. And then they brought it back down. So this trader story, and this is how I see this, is this trader was conservative. And then they decided, hey, you know what? I found a strategy that shows some pretty good potential. And then they saw some problems within the methodology, and then they cut that strategy out completely, and then went to a new strategy, which is interesting because I don't know for sure, but this person is using the same pairs as I am, or used to. I used to trade them this NZD CAD. The Ranger used to trade the NZD CAD, but it also currently trades the Aussie CAD and the Pound CAD. So I'm actually suspicious of this trader or this fund using my algorithm in some way or another, which is pretty fascinating. But you'll see that some people can break the norms of this 10% being the maximum that you can take from the market. But they also realize that the majority of these long-term or longer-term strategies, like this one that's been going since 2017, are shooting for gains in the 2 to 5% range. And this goes on and on. If you find the longest running accounts at Signal Start, you'll see that most of the ones that have been around for 3 to 5 years have gains in that same area. So this gives you an idea of what's possible over the long term, over 5 years, 3 to 5 years, or even 10 years of time. So if your strategy, if your profit is in that range of 3 upwards of 8%, in that range, then you're looking at a good place for profit, which is consistent, it can be achievable, and it can be taken every single month if you know what you're doing. Okay, so that's pretty much what I wanted to cover in this video, and I hope it gives you a better idea of what you should be expecting from your trading now and in the future if you want to keep your money in your account for years of time. Don't follow these Instagram or these influencers that try to get you to buy a course or a signal service promising you huge gains, because those accounts that you're trading with them are going to be blown at some point, and it's better to just hold on to that money and grow it at a slower pace so you can set yourself up for early retirement or for, potentially trading as a full-time income. You need to start somewhere, and starting small and conservative is a good place to be. All right, so that's it for my video this week. I'll see you guys on the next one next week.